One of the ways to invest in multiple asset classes is through mutual funds. But how do you pick the mutual fund that best suits you? In this video, we will try to give you all the parameters that you need to look at before choosing a mutual fund. Keep listening. Financial goals. First, let's look at the bigger picture. Determine your goal. Ask yourself, why are you investing? How long do you plan to invest for? And what kind of returns you're hoping for? Now, your investment goal can be either short-term, like making a down payment on a house, or buying a car, or going on an international vacation. It could also be long-term, like saving for retirement or your children's education. For shorter-term goals, you may look at debt funds, and for a longer term, you may look at equity-oriented funds. Let's go into more details. Risk appetite. Assessing your risk appetite is crucial before you make any investment. Just like all investments are subject to risk, mutual funds can also experience market ups and downs and come with different levels of risk. This depends on the types of assets that these mutual funds hold. Now, generally, equity funds tend to carry more risk than debt funds. Small cap funds then are considered riskier than large cap funds. The Securities and Exchange Board of India has classified funds into 6 risk levels from low to very high. This will help you choose a fund that aligns with your risk tolerance. Then comes fund performance, starting with returns. After all of us invest in the hopes of making returns, right? Always look at 2 things. 1, has the fund done better than the benchmark it tracks? And 2, how consistent have the returns been? Try always to look at longer-term time frames, which can give you a better picture. If the fund has, let's say, beaten the benchmark over multiple time frames, then that is a bit of a positive sign. But always remember that past performance is no guarantee of how the fund may do in the future. Then comes fund house. The fund house, or the AMC asset management company that manages the mutual fund, has an important role to play in how the fund may perform. You may want to pick a fund house with a good reputation and quality. Companies that adhere to strict corporate governance rules and ethics. But apart from those factors, the performance track record and tenure of the CIO and the fund management team may also be factors to be considered. The expense ratio. This is the ratio that tells you the fee that the mutual fund house charges for administration, management, and other expenses of the fund. Now, the ratio has been capped by SEBI, but you may want to compare the ratio with other mutual fund houses in the same category. Of course, do remember that active funds will have a higher expense ratio than passive funds. The Sharpe Ratio. You will find the Sharpe ratio mentioned in every mutual fund house's fact sheet. This ratio helps you measure how much return the MF investment generates compared to its risk. In a way, it tells you whether the investment's returns are worth the level of risk taken to earn that return. But simply the number won't tell you much. You have to again compare it with other funds. Generally, if the Sharpe ratio is more than 1, it's a positive sign. Remember always to take expert advice before you choose a mutual fund. So wait no more and choose the mutual fund that suits you today.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.